Hey, if you're an affiliate marketer and you've ever wondered whether or not you should promote CPA offers or rev share offers, or when the right time might be to promote each, stick around and watch today's video through until the very end, as I'm about to break down the pros and cons of each type of offer and exactly when you should consider promoting each as an affiliate marketer. With that said, if this is your first video, my name is Misha Wilson, and over the course of the last few years, I've now done over $25 million in total sales online, teaching the principles behind affiliate marketing and information marketing. And some of my students have gone on to generate, multiple six figures, even seven figures in commissions, leveraging the principles I'm about to share. As always, if you get value out of this video, don't forget to let me know in the comments section below what your biggest takeaway is. And don't forget to go ahead and hit that subscribe button and that bell icon notification button so that you're notified when I do more videos just like this. With that said, let's go ahead and dive right in.
Welcome to the Misha Wilson Show, where we show you how to create massive success online so you can enjoy the lifestyle of your wildest dreams.
All right, so again, what we're talking about here today is the difference between a CPA offer and a revenue share offer, and essentially which one you should promote and which one is better, right? And it's not necessarily that we're going to touch on which one is better. We're more going to touch on the pros and cons of each and when it might be better to promote one versus the other. All right, so firstly, just to define them, CPA is cost per action. All right, so essentially with a CPA offer, every single time you drive an action, whether or not it's sending a lead, sending a sale, or something between an application, you are going to get paid a specific amount no matter what happens after that, right? So if the customer refunds, if the customer charges back, if the customer buys a back-end product, you are not going to get credit for the back-end product, but also you will not have to eat the refund if someone goes ahead and refunds. All right, it's a flat fixed rate per action. So when someone buys, you will make $100, period, end of story, just as an example, right? Now, revenue share on the other end is where you get a percentage of the overall revenue, right? So let's say it's a 33% revenue share offer. If there's an $100 offer that someone's selling, you'll make $33 every single time someone buys that $100 offer. And usually with revenue share, if someone goes ahead and buys a back-end program, you will get credit. So you might get 33%. It might be a slightly different percentage for a back-end program. Usually each product has an actual percentage. So you'll earn more on the back end, but at the same time, if someone refunds, if someone charges back, etc., that will also be pulled out of your commissions. All right, so really, there are pros and cons of each. Now, on the CPA side, really how it works very simply is, the pro is that oftentimes you will end up getting paid faster and you will end up getting paid more in the short term. So oftentimes with a CPA offer, let's say you're selling something for $47, oftentimes product creators will pay, $85, $90, $100 for an actual sale that you send their way. And they can do that because they know that over the course of a period of time, they're going to take that $47 customer and they're going to sell them more products, more services, more goods on the back end. And they might know for every single $47 customer they get, that customer ends up being worth, let's say $300 over the course of a 3 or a 6 month period. So for them, it's a total no-brainer to spend $100 per customer because again, they'll make $300 over a 3 month period. They're happy, you're happy because you send a $47 sale, you make $100. And if that customer decides to refund, if that customer decides to charge back, if that customer decides that they're just not interested anymore and they do refund, well, guess what? That doesn't get pulled out of your commissions. All right, so essentially what's really cool about CPA, because there's no refund, because there's no chargebacks that you at least feel, because there's none of it that you feel as an affiliate, they can also pay out much more quickly. Meaning, look, if you make a sale on Monday, oftentimes you will get paid on Friday. Where with revenue share, it's a lot different. All right, so with revenue share, there's usually a 30-day money-back guarantee. There is a period that the customer has to, go through the programs before you get paid. And essentially, if that customer decides to refund, if that customer charges back, if that customer, doesn't necessarily stick around, the product creator will claw back that commission from you, meaning you don't get credit. And therefore, what that means is that there ends up being a bigger delay for you getting paid. And the reason that is the product creator needs to go ahead and wait that 30-day period before they go ahead and pay out commissions, because if they didn't, you might make a sale on Monday, they might pay out on Friday, but then if the person refunds the next Monday and they have no way to claw back that commission from you, they're then in the red. All right, so think about it where essentially in the short term, CPA can make money faster. I was about to say more money faster. I would say it makes money faster in the short term. And revenue share, on the flip side, can make more money long term if you have the ability to float the cash flow. All right, now the tricky part about revenue share sometimes is, again, you might make a sale today, then there's a 30-day refund period. And then let's say they pay out every 2 weeks. So you have to wait the 30-day refund period plus, let's say 14 days, because let's say there's every 2-week payouts. So you're then, 45 days out from getting paid as an affiliate, which means that if you can't continue to spend money on advertising, being okay with making money back 45 days from now to then reinvest into more advertising, if you can't float that cash flow wise, you then, of course, have to pause your ads, you have to stop promoting, you can't necessarily drive more traffic, and as a result, your business goes ahead and stagnates. All right, so how I would look at this is, instead of looking at it, and this actually came from a student, the question, which was, which one should I promote? And instead of looking at it as which one, I would look at it as where are you now in your journey and what ultimately are you optimizing for? All right, so if you're brand new and you're optimizing for cash flow, and cash flow is the most important thing, if there's a really hot CPA offer that's promoting really well, that's paying out really well, it's paying out high, and it's paying out quickly, because again, you don't need to worry about refunds, that might be the best play. All right, now it might not be the most money long term, it might not be the best model long term, but in the short term, if you need cash flow, sometimes you have to promote the thing that ultimately gives you cash flow. All right, start with the end in mind, know the outcome that ultimately you are opting for or optimizing for. And then from there with revenue share, if you're at a point where you have some cash, if you're at a point where you don't, you're not stressing about cash flow issues, or if you're at a point where, let's say you have a big email list, 100,000 people on a list or 10,000 people on a list. I personally, whenever I promote a JV partner, it's only on a revenue share basis, because I want to make more, and I'm okay with making more over a longer period of time, because I have the dry powder, because I have cash in the bank, because I can float, and because I'm fine with, sometimes having the payout be 30 days later, 45 days later, and also having the payout be less at the very beginning. Ultimately, I end up making more money long term. And that's just the model that I end up using most of the time based on my own unique situation. All right, so ultimately what I would recommend is understanding that both models can be extremely powerful. I know people who literally make hundreds of thousands of dollars a day with CPA marketing when it comes to overall commissions. Now they, of course, spend a lot of money on advertising in order to do that, so they're not pocketing $100,000 a day. But I know people who drive that kind of volume, entire teams. And I also know people who, make insane money with revenue share as an affiliate. And so I wouldn't say one or the other. I would look at where you're at in your journey. I would look at what you're optimizing for. I would look at if you're optimizing for cash flow short-term or long-term profit and long-term higher profit margins and more money. Choose which one you need based on your own personal situation. And then once again, optimize based on where you're at right now. With that said, I hope you got a ton of value out of this video. As always, if you did, don't forget to go ahead and hit that subscribe button and that bell icon notification button, and let me know what your biggest takeaway was in the comments section below.